The S&P 500 is knocking on the door, just inches away from new all-time highs. When copper confirmed the breakout today in some of the industrial, small cap names, some of the other cyclical areas outside of tech driving the market. Let's break it all down today. If you want today's trade idea and full deep analysis in our market outlook and a full market outlook video, you can watch that video with the link down in the description below, as well as in the pinned comment. The S&P 500 jumped 0.8% today, finishing just under its all-time closing high. This marks the second out of 3 strong days to the upside. And more importantly, today was not led by just mega cap tech. Small caps and mid caps as well outperformed, with the Russell 2000 and the S&P mid cap 400 both gaining over 1.3%. The small caps just absolutely killing everybody today. This rotation into broader risk assets is the kind of follow through bulls want to see as we approach key resistance levels. Driving that strength was a sharp macro shift, the US dollar falling to a 3-year low point, and copper, often a barometer for global growth in conjunction especially with small cap stocks, surged nearly 3% to new multi-week highs. The move was confirmed under the hood. Energy, industrials, materials led, while defensive like real estate and staples lagged behind. This was a classic risk-on rotation backed by falling yields and rising cyclical demand. In particular, again, the part of the cyclicals that's more associated with economic growth expectations. So we've got a broad rally, strong intermarket confirmation, and the S&P sitting just shy of all-time highs. This is exactly the kind of session that deserves attention, and I dive into in a lot deeper detail in the full market outlook video. Of course, as always, if you find these kind of breakdowns helpful, hit that like button down below so more traders can see it, and don't forget to subscribe for these daily updates every market day for about 5 minutes or less. All right, let's go a layer deeper and talk about what today's price action really means, because this wasn't just a green day on the surface. Different markets outside of just equities moved together in a way that reinforces this bullish setup. Starting with yields. As you can see, 10-year yields dropped again today, and that's easing pressure on both equities and credit markets. At the same time, the dollar hit its lowest level in 3 years, which typically lifts risk assets and commodities. And the biggest tell was copper. Copper jumped nearly 3%, broke out of this multi-week consolidation range. That's one of the clearest signals that growth expectations are picking up, especially when it happens alongside falling yields. So when you see stocks rally, copper break out, the dollar fall, volatility fall some more, all in the same session, that's intermarket alignment. And that's the kind of signal that we should pay attention to, that big money institutions pay attention to. It also tells us this wasn't just a tech bounce. Small caps, mid caps, cyclicals all participating. You can see the RSP doing a little bit better today. It finished lower by the end of the day, but it had a better day compared to yesterday when S&P really outperformed the equal weighted version of its index. This makes today's rally a lot more credible and more sustainable than some of the narrow leadership that we've seen recently. Today wasn't just a relief bounce, it was more of a coordinated move across multiple markets, and not just equities, that suggests deeper conviction behind the buying. And when you see that kind of alignment, it opens the door to some pretty good setups, including our trade idea that we have in our market outlook video. So I break this all down in the full market outlook video, complete with more charts, macro context, and again, as well as our trade idea that we already put on during the Market Outlook live session before the market close. Both the Market Outlook, full Market Outlook, and the Market Outlook live is for foundation members at Market Scholars. You can join for just $29 a month, which works out to being less than $1.40 per video, and unlock every daily video, tool, and strategy breakdown that we have. Head over to Market Scholars. The link is down in the description below, as well as again in the pinned comment. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.